Stripe is one of the biggest payment providers in the entire world. And so when they introduce new products or adopt new technologies, investors need to pay attention. And the one that really caught my eye this week is that Stripe is now going to be enabling merchants to integrate stable coins into their payment system. This is going to be basically happen on the back end for merchants. And as you check out from a Stripe checkout, instead of clicking credit card, you can click, I want to pay with crypto, and you can actually pay with your crypto wallet. You can pay with USDC. In theory, this should lower the costs that merchants are paying not only Stripe, but companies like Visa and the banking system, and that could really disrupt payments. I think if you are in cryptocurrencies or interested in a company like Coinbase, one of the bullish cases is that the blockchain could potentially be a much more efficient way to move money around than the current credit card and debit card system that we use today. Merchants traditionally pay about 3% of each transaction to their credit card companies and the entire infrastructure, including companies like Stripe. And that's why companies like Visa and why banks are so profitable. But if there's a more efficient way, maybe merchants would actually prefer a solution that would save them that 3%. And so that's where cryptocurrency really comes in. If you're just making a direct transfer on, for example, the Solana blockchain using USDC, which is a stablecoin that was started by Circle and Coinbase, that transaction can be fractions of a penny. It's not 3%, it's less than a tenth of a penny to move money from one place to another. So can the infrastructure be built to do that on a broader scale? And Stripe said yes. And I think some of their comments about this were really telling this week. So I want to dig into exactly what they announced and how this might impact the industry long term. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's get to exactly what Stripe announced. And I'm going to give some quotes that I think give some interesting background here. At an event this week, Stripe announced that they're going to be accepting crypto payments, something that they actually ended in 2018 when they used to accept Bitcoin payments. And there's a video that I can link to in the show notes. But what Stripe said is they're going to accept USDC stablecoin transfers on Solana, Ethereum, and Polygon blockchains. If you're familiar with these three, Solana is by far going to be the lowest cost, followed by Polygon, which is going to be relatively slow, and then Ethereum, which is by far the most expensive. But at least opens up these options. And John Collison talked about this in a presentation called Stripe Sessions. And I want to pull out some of the interesting quotes. He started by talking about some of the funny things that happen in crypto, like dog coins and kids making millions of dollars drawing pictures. But he says, but if you're just skimming the funny headlines and chuckling and moving on, you're missing out on all the genuinely exciting progress that's been happening in crypto, and you owe it to yourself to dig in properly. Goes on to say that blockchains are now transacting in milliseconds. It's now perfectly affordable to transact on the blockchain, and stablecoins are becoming stable. And with those three things, a company like Stripe can now invest in actually using this as part of their payment infrastructure. And that's really the game changer. The other similar solution would be Coinbase Pay. So companies like Shopify have allowed Coinbase Pay, and this is where you could pay for goods that customers accepted using cryptocurrencies. But the adoption of this is not really that high. And having Coinbase Pay sitting next to something like Shop Pay, which is powered by Stripe, or paying with Stripe, is maybe not all that effective. But when Stripe itself is actually integrating some of these same solutions, then that's really, I think, where you can get increased adoption. And for merchants, this makes a lot of sense. But for Coinbase specifically, this could be a tailwind for the business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I want to show in these charts exactly what I mean. First of all, stablecoin revenue. This is a quarterly chart, so this is showing you each quarter how much revenue Coinbase is making from each of these segments. And stablecoins is primarily making money off of the USDC token. The way that the USDC token works is there are actual assets, actual dollars that are backing the token, but those dollars can be invested in short-term bonds. They can be sitting in a bank account earning interest. So they're actually making money behind the scenes. Circle now runs the USDC token, but they share some of that revenue with Coinbase as part of an agreement that they had. These two companies actually ran the token 50-50 through what was called the Center Consortium, but as Circle moves closer to IPO, it made more sense for them to split that off and have Circle have full control and be able to do developments like this with Stripe without Coinbase being in the way. But Coinbase still generates revenue from that token. And the revenue is really significant, $171.6 million last quarter. And this could potentially be $1 billion business in 2024. But there's other businesses as well. Subscription and services revenue. This is more infrastructure revenue. Blockchain rewards revenue, $95.1 million. You have the revenue that Coinbase is generating from the Base blockchain. So there's a lot of different ways that Coinbase can make money providing infrastructure, providing stablecoins, if stablecoin transactions on the blockchain increase in volume. And so that's really where I think Stripe accepting cryptocurrencies and stablecoins is really going to be a meaningful moment for the industry. I've done videos in the past on how the financial markets are starting to actually pay attention to this technology, doing things like testing bonds on the blockchain. Coinbase itself is doing that. We now have ETFs, which Coinbase is a custodian. So you're seeing all of these large financial institutions start to adopt blockchain technology because it's more efficient than the current model. And I think that's really the key from a disruption standpoint, is if this wasn't faster, easier, more efficient, more scalable, then they wouldn't be doing it. But the blockchains have improved enough over the last few years. Costs have come down, speeds have gone up, and the need for disruption is there. And that's what's finally taking hold. And I think that's going to continue over the next few years. This is one of the reasons that I was so bullish on Coinbase a year ago, and why I continue to be bullish, despite the fact that shares are up 250 or 300%. Just a crazy run for the stock. But there's still a long runway of growth if the company is able to get some of these products adopted on a wider level. So Stripe is a huge step in that direction. The challenge for investors right now is, what in the world do you pay for a company like Coinbase? Like I said, the stock has been on just a tremendous run, up 335% over the past year. And shares are really expensive. As I'm recording, the trailing price to earnings multiple, which maybe isn't the best metric, is over 600. Forward price to earnings multiple is still 94. So very expensive based on that metric. Enterprise value to sales is 19. So investors are expecting a lot of growth, and there may be a lot of growth. But what I think what I think we need to focus on right now is the fundamental disruption that's starting to take place. How all these big institutions like BlackRock, like Stripe, are really starting to pay attention to the blockchain, and they're leaning on Coinbase because they're the adults in the room. They're the company that has actually built the infrastructure to keep people's money safe. They have wallets that you can integrate into different apps. They have a stable coin. They have their own blockchain. So I think this is still going to be one of the biggest beneficiaries, even if we're using something like USDC on the Solana blockchain or a different stable coin even. As the rising tide is going to lift all boats. And right now, Coinbase is the biggest boat in the crypto ocean. So that's why I think we should look at Coinbase right now, and Stripe is just telling us that this is something we should be paying more and more attention to. Doesn't mean that the stock might not fall after earnings are released, but I do think we are going to see strong momentum for Coinbase, even though this is a very expensive stock. But what do you think about the news from Stripe? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.